All right. Thanks for everyone who's joining us here at the seminar. I know a couple of you guys that are already on here. Guys, so this is our seminar on how to purchase a home without a social security number. For those of you that don't know, this is a program that is known for an ITIN number. But first, I wanted to introduce myself. I wanted to introduce Leticia, and also we have a guest speaker here who works with credit repair. So if anybody needs credit repair, his name's Adam Briggs. He's great, does an awesome job, and he's also a very compassionate guy. So my name is Rafael D'souza. I've been a loan officer for quite some time now. I've been in the real estate industry for about 7 years now. And, you know, I honestly love what I do. Since I began, back when I was a child, my parents dealt with a serious situation with the home crisis. So I knew I've always known what I wanted to do since I began. And, you know, it's always great teaching new home buyers or home real estate investors or even realtors on new programs where we can, you know, help them find better ways to better associate their clients or even investment for themselves. So Leticia, if you want to present yourself.
What a great introduction. Hi, I'm Leticia Fazio. I'm a loan officer here at Reiki Mortgage. We're going to be going over some programs to how to get a house with your ITIN number, your tax ID. I just want to make sure that we're very clear. Every situation is very personal and very different. So I do encourage you guys to leave your information or give us a call so we can look into your situation and we can help you out and give you your answer and look into your specific situation. All right. So we're going to start talking about a couple programs available for the home buying. We're just going to get the slides going. All right, guys, here we go. So the first loan program we're going to talk about is the tax return loan. Couple things that you're going to need for this program. First, you're going to need a valid form of ID. So a driver's license or a state ID. But if you don't have any of those, your passport will work just fine too. Okay. Next thing you're going to need for this program is your tax return. For this program, we don't need the usual 2 years that most of the other loan programs require. For this one, we only need the most recent one. We're going to be looking at your net income, not your gross income. It's always good to remember that the bank really only cares about how much money you're bringing in after all your deductions. They're not going to look at how much money you made, but how much money you're bringing in, okay? With that number, along with pulling your credit and checking out your debt, we are going to get to a number which we call the debt to income ratio. With that number, you're going to have to be under a certain amount. It changes from loan to loan, but that's how the banks get to it with your tax return, pulling your credit, checking out your debt. Okay. Next thing we're going to talk about is your bank statements. We're going to need your 2 most recent bank statements. And the reason why we need those is the bank wants to make sure that you have all the funds necessary to close this transaction. And they also want to know that the money is yours. For this program, unfortunately, gifts are not allowed for your down payment. You have to prove that the money is yours, it's in your account, you have access to it, and they want to make sure it's not a loan and it's not a gift. It's your money, you worked, you saved, you can use it for your cash to close. Next thing we're going to talk about is your pay stubs. We're going to need your pay stubs to see how many hours you work a week, to have your pay rate. Sometimes we're going to need a verification of employment from your employer. And that is so we can have, if your hours vary from week to week, we can have a good average number of how many hours you work. And also if you do get commission pay or bonus or overtime, we can have a breakdown of those numbers. We're going to average through the year, and we're going to use that towards your income. Okay. Now I'm just going to talk very briefly about the down payments. There are many requirements for all different down payments. So we're not going to go into too much detail, but the minimum down payment for an Itin loan is 10%. So to get qualified for a 10% down payment, just a few of the things that you're going to need. A big one is 6 months of reserves, which means you're going to need 6 months of your mortgage payment set aside in your bank account. It's not going to be money that you're going to use for your down payment or towards your cash to close. It's just money set aside as reserves, and that is 6 months for the 10% down payment. You also need to show 24 months of house payment, rental payment. So that's your rent checks. It has to come out of your account. If it's your name on the loan, the check has to come out of your account, and you have to prove that it's your rental pay. Okay, so they want to see that you have a good history of 24 months of rental pay. Your credit score to get qualified for the 10% down is 680. And now we're going to talk about a little bit of the 15%. They have a couple requirements for that too. They do require that you have 5 lines of credit. One of those lines of credit has to be over 24 months old, and 4 of those accounts have to be over 12 months old. That's so they can see that you have a good history with those companies, a good history of payment with those companies. They do require that one of the lines of credit is a minimum of, it's a $3,000 limit too. Now the 20% down payment is a little bit easier to get qualified for. For the 20% down payment, you have the option of doing a bank statement loan, which my friend Raf is going to go over and tell you everything about it in just a minute. But your debt to income ratio that we talked about earlier, it can go a little bit higher with the 20% down. It can go up to 55 as opposed to 43 for the 10% down, for example. But guys, if you don't have all those lines of credit, if you don't have a high credit score, if you don't fit those requirements, if you have, let's say, a brand new tax ID and you can't prove your good history, you can still buy a home because you have an option of doing a 25% down payment. Okay, so if you do a 25% down payment, credit is not required. You do not have to fit into all those requirements for the other down payments. Okay, so if that's your case, don't think that you can't buy a home right now. You can still buy a home. The down payment is going to be a little bit higher. So with that, I'm going to tell you guys, it's never too early to start looking into it. Okay, if you think you want to buy a home at the end of the year and you're going to start looking at it in a couple of months, I do suggest that you guys start looking at the loans and the options that you have as soon as possible, because we're never going to tell you you don't qualify, you can't buy a home. That's never going to be the case. We're always going to tell you what you need in order to buy your home. So if you want to buy a home in January and you're going to start looking in December, I strongly suggest you do start looking into it as soon as possible. Okay? We can look into your situation. We can pull your credit. We can tell you what you need. We can tell you how much you can qualify for. So it's never too early. All right, now I'm going to pass it over to Raf, and he's going to tell you guys all about the bank statement loans and the profit and loss loans. All right, thanks. Come right over.
Awesome job. All right. Okay. Stop again. I click on the screen first. Okay, awesome. All right, perfect. So let's get into these newer programs as well. Leticia made a very great showing here as to the tax returns and how it works. And another form of qualifying for a specific loan is through bank statements. Now, keep in mind that all the specific loans for ITIN numbers, those of you that have social security numbers as well can also qualify for these loans. Okay, so it works both ways, but in most cases, people with social security numbers, they want to go with programs with a smaller down payment, you know, depending on their specific scenario. And now, going into these 12 months of bank statements, and let's start with the documentation. Well, obviously, we're going to need 12 months of bank statements, okay? We're going to need a valid form of identification, okay? And the way this is going to work is basically the same way in terms of the tax return program, where the bank is going to look at your 12 months of bank statements, and they're going to determine a specific amount that you would make a month, okay? So this specific amount is going to determine what exactly you qualify for. So let's say you need $5,000 a month to qualify for a $300,000 house, correct? So basically, if they verify your last 12 months of bank statements, the bank comes and says, Rafael, we just verified the 12 months, and the monthly amount that we were able to qualify your borrower is for $5,000. Therefore, I would use $5,000 helping you to qualify $300,000 for a $300,000 property. Now, keep in mind, not always it's going to be the situation where, you know, you got qualified, or maybe you'll qualify for something greater than what you were expecting. Okay, it's always good to keep, you know, to stay, you know, down to earth and and depending on how much you really know that you move on towards your bank accounts. And the bank statement loan, it's very helpful, especially to those who, when they declare income taxes, and sometimes they feel they make more, but because Uncle Sam takes so much, people declare a lot of expenses. And now the 12 months of bank statements, they don't necessarily go based on from January to December, which is when you declare your income taxes. The 12 months of bank statements, they go from a specific month to another specific month. Meaning today we are in April. So we're going to look at your last bank statements from April of last year to April of this year. Okay. So that would be the last year that you know, we're using your bank statements, because the way the bank is going to look at it is they want to know as up to date as possible on how much money you're making. Because maybe 2 years ago, you weren't making as much money as you were today. Another thing to keep in mind is that for those of you who receive W-2, or in this case, are employed by a specific company, then you would just qualify in the tax return program. The 12 months of bank statements, it's only helpful to those who are self-employed in any way, shape, or form. Now, if you have a W-2, as Leticia explained, you don't really have to, because you have a specific amount of income, whether it's weekly, bi-weekly, or monthly, where you make a specific amount, you know, and whether you just started in the job or not, you know, we can use the full yearly amount that you would make. Now, with the 12 months of bank statements, based on whatever you made in the last 12 months, being self-employed. Okay, so the next program that we're going to talk here about is the profit and loss loan. So for those of you that don't know what a profit and loss is, it's basically a statement that's prepared by a tax accountant. Okay, and this tax accountant, this is the specific document that he uses to declare your income taxes. So this is never actually sent out to the IRS for verification. Now, it's always good to keep your numbers as compared to whatever you actually make. Okay, so for example, the difference between the bank statement program and the profit and loss program is that the profit and loss is not verified by the bank. Okay, your income is going to be verified by an accountant, and the profit and loss is going to be sent to the bank. Okay, and whatever the accountant said you made for that year, the bank is going to use that specific amount to use in your qualification. Therefore, let's say that your accountant used you for $60,000 income. That $60,000 yearly income, that means $5,000 a month is what you make. And therefore, I'm going to use $5,000 a month based off the profit and loss that your accountant provided. And with that profit and loss, I would send it to the bank for the bank to approve on top of your loan. Now, the documentation that we need here is also a valid form of identification. Again, a valid form of identification is basically a passport if you don't have a driver's license, okay? Passport's the easiest way. As long as it's valid, it's up to date, we can definitely use passports in order to qualify you. And also, in the profit and loss program, the bank is going to want to verify your assets, meaning your last two most recent or your two most recent bank statements that you can use, okay? And again, for this profit and loss program, it's a great way. It goes also to your most recent year. So again, if it's April of this year and April of last year, we go based on your last full year. So it's never a January to December basis, okay? Unless you are in January and, unless you're in December and you're trying to qualify for a house in December, then yes, it's going to be from January to December, okay? Now, the way we would validate this profit and loss is that your account needs to be licensed, okay? He needs to be able to sign this profit and loss form as stated, saying that this is for a mortgage loan, because the bank will verify and make sure that the person that's providing this profit and loss is actually valid and able to do so, because most people in some different scenarios might want to misrepresent, not most people, but some people might want to misrepresent specific information and just have anybody prepare a profit and loss. No, the bank makes sure that the person providing the profit and loss is actually someone who can provide the information that they're stating, okay? It's actually from a professional that can provide this information, which, you're going to be providing to us. Okay, and the profit and loss works based off the deposits you make on a month-to-month basis on your bank statement. So the way they're going to look at your profit and loss is with your last 12 months of bank statements. Okay, so if you guys have any types of questions regarding these loans, listen, this is more of a vague situation where we're explaining to you what these loans are, but we understand that there's a type of scenario for each and every one of you. So we don't want to just throw everything there, because your scenario might be different from somebody else's scenario. Okay, so it's always good, to keep that in mind, because if you have a specific question that maybe you don't want to make here, and you want to make, just with me on the phone or with Leticia on the phone or with whoever on the phone, then make sure, you write it down, make sure you get it down when you call us, and we'll be more than happy to run this through with you guys. Also, at the end of this webinar here, we're also going to be open for questions. So if you want to make a question, please feel free to do so. It's always good, to help out everybody with any specific concerns that they might have. All right. So next here, I want to present you guys to the we can call him the man of the hour. It's Adam Briggs. He works with credit repair. So those of you that also are worried about their credit score and want to better your credit score, Adam here is definitely the man to search up on that. All right, thank you.
Good evening, everybody. My name is Adam Briggs. I am with National Financial Credit Group. We are based out of Braintree, Mass. We can work with folks nationally. However, we are, most of our businesses, obviously New England, because this is where we are. So the first steps when you're talking about credit and you're looking at getting a mortgage or whatever the case may be, is you need to call the fine folks here at Right Key Mortgage. You need to start by having your credit reviewed. Those are your first steps. I'm going to walk you through a little bit about what drives credit. Obviously, you can see on your screen right now what is a good credit score and how does that affect your mortgage. So you'll see those words on the right there, and it talks about low risk, medium risk, high risk. Very simply, if you're a 620 and below, if you are a high risk, that means in the past you have not, maybe there was something in your life that got in the way. Maybe there was a divorce, maybe there was a loss of job, maybe some bills were paid late due to anything. When you're a high risk, these folks are going to give you, and the banks are going to give you a higher interest rate, okay? The higher your credit score, you're going to be low risk and you're going to get a better interest rate, okay? I hope I'm not yelling. I feel like I'm yelling. So this screen here shows you how credit affects you, length of time. So I don't really look too much at anything beyond 2 years. Credit that's on within the past 2 years is the heaviest weight on your report. Now, why is that important? So you have a collection on there for $40 from, let's say, a medical bill, and it's been on your report for 4 years, and it has no activity, which means a payment has not been made on it. If you say, hey, listen, it's $40, I'm going to go pay that today. What's going to happen, that payment's going to post, and now it's going to have new activity, and your score is actually going to go down. I'm not telling you not to pay your bills, please. Here in Massachusetts, we have a 6-year statute of limitations where these creditors and such, unless it's a federal loan, like a student loan, you cannot escape those. If it's outside of the 6-year statute of limitations in Massachusetts, then they are not legally able to collect from you at that point. They cannot take you to court. They can still come after you for 7 to 10 years from the last payment date. However, they cannot take you to court. Okay, so the more recent it is, anything within the past 2 years has a heavier weight than anything else on your report. All right, this is the most important piece to the puzzle. You have to understand this. It's very simple. What drives your credit score? Your credit score is an algorithm. The 3 credit bureaus, Equifax, Experian, and TransUnion. You'll notice when the fine folks here at Right Key Mortgage pull your credit, it uses 3 different FICOs. It'll use, I believe, a FICO 2, a FICO 4, and a FICO 5, I believe. So the score, that's why the scoring models are a little bit different when you get your score, and they're going to use your middle score. Not an average, they're going to use your middle. What drives your score, though? How do you get that? How do you get your credit score up? So the most important piece of that pie chart you see there, 35% of your score is your payment history. That means on-time payments, not having collections, not having charge-offs, repossessions, bankruptcies, foreclosures, short sales, anything that would be negative on your credit report, that would fall in that 35% category. So keep your payments on time, and the longer you do so and you pay your bills on time, that's your number 1 factor on your credit report. Now, the number 2 factor, a lot of people don't know this, you will now, 30% of your score is generated by the amounts owed on your credit report. So what do I mean by that? If you have a credit card with a $1,000 limit, once you go over 30% of that limit, which is $300, once you go over $300, your score will go down a little bit. Once you go over 500, which is 50%, your score will go down even further and further and further. The good news is credit cards are supposed to be used for emergencies. So if you do use them and your score goes down, when you pay them off or pay them down under that 30%, the next cycle when the credit card reports, your score will rebound. You will not rebound very quickly from late payments, but you will rebound when you pay those off. Length of history is the next biggest piece of that puzzle. It's important that you keep your credit. Do not close credit cards. You had a Macy's card 10 years ago and you haven't used it. You see it on your credit report. It's tempting to say, hey, let me go close that. Here's what happens when you do that. You have 10 years of perfect history on that card. All those bonus points that you got for having that perfect account for 10 years, now you just lost all the bonus points. So that's why length of history is very important. It's really hard to build a very high credit score until you have 2 years of history. Next one there is credit inquiries. That's not a huge hit to your credit. Unfortunately, there are some sites out there that you can monitor on your phone. There are apps on your phone. It'll tell you, oh, someone pulled your credit. You just lost 30 points. It's not accurate. It's a site that most people have nowadays. So just be cautious of that. However, you do lose a few points. If the fine folks here at Right Key Mortgage need to pull your credit, and then you've done something to better your credit in the meantime, if they're going to pull your credit again within a 30-day period of time, you only get 1 hit. You do not get additional hits for that. The next one there is types of credit used. It's very important that you have a mix of credit. You have to have revolving credit, which are credit cards, anything with a payment changes every month. Revolving credit, you want to have at least 2 to 3 accounts, so 2 to 3 credit cards, always. Some people that don't like credit cards, you got to do it. You have to have revolving accounts. The other mix, you want to have revolving accounts, and you want to also have installment loans. That would be an auto loan. That would be a mortgage. Anything that has a set payment. Your student loans, those are installment. A home equity line of credit is not an installment loan. So what people will do, they'll take out a $50,000 home equity line of credit. They'll have perfect credit. They'll take out a $50,000 HELOC, and they'll max it out. They'll use it to do repairs or consolidate bills, whatever they want to do with it. The problem is a HELOC loan, a home equity line of credit, it's a revolving account, okay? It acts that way, and your credit score will go down. So just keep that in mind. I'm not here to talk about loans. Do's and don'ts. So maxing out credit cards is a big no. Credit cards are there for one reason. They're there for emergencies. I have no problem with people using them. Some people say, oh, I want to get points. I get free airfare. I'm going to like Rafael. He went to Cuba for like three months. So he wanted to build his freaking flyer points. That's great. Use the card, earn the points, pay it off the next day, or pay it off a few days later, and you'll still earn those points. Okay? Remember, over 30%, you start to lose points. Over 50, more, 75, more, and so on. Okay? And the more your credit drops, the more likely the credit, your creditor is actually going to drop your limit. So you want to be cautious of that as well. Avoid co-signing loans unless it's a spouse or a child. I like that. I think I actually created that line. I think you guys took it out of the other slide. That was good. That's because I think it was me. So when you have good credit and you have friends and family and girlfriends and boyfriends, it's very tempting to want to co-sign a loan for somebody. Here's what I'll tell you. Nobody needs to know you have good credit. Nobody needs to know you have interest rates on your vehicles, your home, or anything like that. That's personal. Now, if you do decide you're dating someone, let's use that example, and you think it's going to be forever, and you co-sign for a loan, or you get cell phones in your name, something like that, here's what I will tell you to do. You pay the bill, and they will pay you. Because guess what? If you had to co-sign for that person, is usually a reason. That means something has happened in their past, and it has caused them to need a co-signer. So guess what? You have perfect credit. You're sitting there with a 780. If you have an AT&T bill or a Verizon bill going to collections, you're going to lose a minimum, with an 800 score, you're going to lose a minimum of 80 to 100 points just for that one item. So you pay the bill, and they pay you. It's the only way it works, okay? Avoid large purchases. I think that when we talk about large purchases, we're talking about credit cards. And again, if you're going to do large purchases, pay them right off. Remember, it's there. People are tempted to use the cards that give them 0% interest. That's great. It's a great idea. However, your score will go down if you become overutilized. Again, you will get those points back. Avoid closing credit cards. Never close credit cards. Leave them open. If they're going to close on their own through time and attrition, that's fine. Do not close them on your own. There's no need. The only time I say it's okay to close a credit card is if possibly years ago you were doing some credit building and you have some credit cards that have monthly or annual fees, and you want to get away from that now that you have good credit. That would be a good idea. You can ask the folks here at Right Key, or you can call myself, and I'll guide you the right way. Information is free. Avoid inquiries on your credit. You don't want to go out and just blindly apply for all kinds of things. You already know the best people in the mortgage industry. That's right here at Right Key. So you don't have to go anywhere else. You're not going to get a better rate. You're not going to get a better program. If it can be done in the mortgage world, I guarantee you they can do it here. So you don't need to have your credit pulled anywhere else. Okay? Don'ts. So having healthy credit habits. I don't know how that's a don't, but that's a good thing. That's a do. Have healthy credit habits. Check credit annually. There's annualcreditreport.com. Here's what I'll tell you about that. It's free. The scores are not free. You don't get scores. So there's another program I do recommend you use. It's called privacyguard.com. I'll say that again in case you're writing it down. Privacyguard.com. It will cost you $1 for a 14-day trial, and then you can cancel it. And what it'll do, it'll give you all 3 scores and all the content on the report. Nothing you have access to, other than myfico.com, which is $30 or $40 a month. Nothing you have access to are real FICO scores. Credit Karma, not FICO scores. Even Privacy Guard, they're not FICO, but they're going to be close. Your CreditWise on your Capital One, not FICO scores, even though they say they are. But they're all Vantage scoring models, okay? So, talks here about utilization, excuse me, about utilization there again. 30% of your limit, that's it. You always need to be under 30%, okay? Oops. I don't know what I did there, sorry people. Put together a financial plan. Keep it simple. You know, put things together, put them on paper. I always tell people when I'm talking to my clients, husband and wife, boyfriend and girlfriend, whoever it is, roommates, sit down, do a financial plan. You know, where's my money going? When's the last time I shot my insurance on my cars? When's the last time I shot my insurance on my home? You know, how much are we paying for cable? A quick little tip, people don't know this. If you are married or two people are in a house and you have cable, you get that deal for 2 years. I'm talking about cable now, isn't that weird? You get that deal for 2 years to get that great deal. At the end of 2 years, you can put it in your spouse's name. A lot of people don't know that, so you can get a deal. So you want to make sure you know where your money's going. Make a date night, have a glass of wine or a bottle of water, whatever it is, and make sure you know where everything is, where your money's going, okay? So I'll let Rafael take you out. My information's there on the screen if you need anything. But the first step, remember, is Right Key Mortgage, Right Key Mortgage, Right Key Mortgage. Contact these folks. They'll review your credit. And then if they need to, they'll send you to us for advice or any questions you have. Thank you.
All right, so we're going to open up for any questions anybody might have. So if you have any questions, feel free to mention some right here, right now. Okay. Yeah. And if you don't want to mention any questions right now, you can always contact our information. I'm just gonna put it up here. You can just contact our information over here. All right. Okay, so I'll just wait a couple seconds. Yeah. All right. Okay, so we actually got a question in here right now. Okay, so question is, if I don't have a driver's license, what happens? Leticia, you want to say this one?
If you don't have a driver's license, you can still use another form of ID. You can use your valid passport. If you have a state ID, having a driver's license is not a requirement as long as you can still have another form of ID and it's current.
Okay. Okay, another question. Let's see here. Okay, so the question is, if you have an ITIN number and you have a specific credit, can you transfer it once you receive a social security number? And yes, the answer to that is yes. You can transfer your ITIN credit to your social security number. Usually the way you go about that is always after you receive your social security number, you can always contact the credit companies or, or whatever the credit card you have. You can call and update your information. And within about a month or so, they would update your new credit report based upon your social security number. So yes, you don't have to restart a new credit in order to purchase a home if you want to purchase a home with a social security number. Okay. Oh, okay. We got here bankruptcies. What if you had a bankruptcy? Leticia, you want to?
You cannot have a bankruptcy for the last 4 years. That's all the bank is going to look at. So for the last 4 years, you have to be clear of bankruptcy.
Awesome. So yeah, so that's actually good. Usually it takes about from 7 to 10 years for a bankruptcy to even come off your credit report. So 4 years is actually a pretty good deal. Yeah. Let's see here. Okay, so here's another question. So I just started with a W-2, or in this case, they just started working for a company, and they want to know if they can qualify even though they just started. Yeah, you can qualify if you just started. How this would go is basically the bank is aware that you now make expected income, or in this case, that like a guaranteed income per week or bi-weekly or whatever the case may be. Therefore, yes, you can qualify based on starting a W-2 job right now. Now, if you go from a W-2 to a self-employed job, then you have to wait for at least for an I-10 loan 1 year, okay? Or if it's a Social Security loan, you would have to wait 2 years if you are self-employed. But if you're just starting now with a new company and they're paying you pay stubs, yes, you can possibly or potentially qualify for a mortgage. Okay, we also got one here. Interest rates for I-10s.
So the interest rates are really gonna depend on your credit. Obviously, the better credit you have, the better interest rate you're gonna have. So that's very particular. You know, we're gonna have to look into your situation. We're gonna have to pull your credit, and in order to give you a more specific answer. So just always keep in mind, the better your credit, the better your interest rate.
Yeah. Okay. Awesome. And the last question here. Okay, I like this one. It's okay. So if for some reason I have to go back to my country of origin, and I purchased a home with an ITIN number, do I lose the home? That's a great question, and honestly, no. In this scenario, the only way you can actually lose your home is if you end up not paying your mortgage payments and foreclosing or short selling, whatever the case may be on the property. But if you do go back to any country of origin where you're from or whatever your nationality may be, then no, you can still hold on to the property, no problem. You can actually, you know, charge your rent from here, you know, or if you want to sell the property, you can have it, the funds actually transfer over to Brazil or whatever the country you might be from. I know I have a couple Brazilians here. So yeah, so in this situation, no, you do not lose the property unless you decide to stop paying the property. No, you can continue holding on to the property. All right. Okay, awesome. Well, guys, I guess that wraps up our webinar for today. If you guys have any questions, please feel free to contact us on the numbers selected here. It would be great to be able to speak with you guys. You know, you can always email my cell phone number as well. If you guys want to know, cell phone number is 781-816-3209. Leticia, if you want to provide your cell phone.
Yes, 774-521-4957. Feel free to call, text, send us an email. We'll be more than happy to help you guys. And like I mentioned before, it's never too early to start looking into it. You might need a plan, you might need some guidance, you might have some specific questions. That's what we do. We're here to help, and we're here to answer all your questions.
All right, awesome. Thank you. Thanks everybody for
Thanks, guys.
logging in. Really appreciate it.